So then a very warm welcome to you. This is Business Today. It's the 6th of July and you're joining us amid a lot of global changes, a lot of global factors that are affecting Sri Lanka, playing up with the economy as well as the stock exchange of Sri Lanka. We'd like to take a look at it and evaluate the performance of some of the key indicators as well as some of these contagious factors that has been influencing our day-to-day lives, among which are the Brexit, the impact of it. Also, we want to talk about crude oil prices on tonight's episode. Importantly, we want to talk to you about the performance of some of the key indicators of the Colombo Stock Exchange. So stay with us as we bring you local personalities, business stories for you in detail, as well as news from overseas. Some of the top stories on tonight's episode are that the new governor who just took in office at the central bank says that there's no urgent need to revise Sri Lankan interest rates. Also talking about the regional comparison and the performance of the stock exchanges, the Asian shares have been falling steadily over the past few days. Meanwhile, bonds surged amidst the Brexit, and fears are actually going up regarding the bond market regionally. From the Sri Lankan stock market, we also have that the credit growth is slowing down as per the statement issued by the new governor of the Central Bank of Sri Lanka. We also have an update regarding the Sri Lankan tourists to see what's happening with that trend. 2.2% up in June 2016. So we're just trying to see how realistic 2 million tourists by the end of 2016 will look like on tonight's episode. We start off with the personality tonight. We have a representative from LOLC Capital One today. He's going to talk to us a lot about the capital market as well as the macroeconomic overview of the Sri Lankan economy. LOLC Capital One is the investment advisory operations of LOLC Group, and LOLC Capital One advises its clients on various ways of utilizing capital market products to optimally benefit them. Let's welcome our guest tonight. Okay, with that, we'd like to welcome on board the Chief Operating Officer of LOLC Capital One, Mr. Shehan Bartholomeuz. Very good evening to you.
Hi, Sabini. Good evening.
So we want to talk a lot about interesting things. We want to talk about the impact the new central bank governor also has on the economy. But just to talk a little bit about you, Shehan is the Chief Operating Officer of LOLC Capital One Limited, a corporate finance firm. He also heads the research function of LOLC Securities Limited. Is a registered stockbroker at the Colombo Stock Exchange. So like you said, we have a lot of crucial things we want to talk about. But just to talk a little bit about the LOLC Group, just to start things off with, tell us a little bit about the functions of LOLC Group and a bit of the subsidiaries of the group.
Yes, LOLC Group is mainly it's a diversified corporation. It has mainly financial segment as well as non-financial segments. It is part of Oris Corporation Japan. It has been part of Oris Corporation, and now it has diversified into other non-financial sectors. It is basically the largest non-banking financial house in the country. It has about $2.5 billion asset base, and recently it has shifted its interest into non-financial sectors to the acquisition of Bounce Group into sectors such as leisure, renewable sector, trading, plantation, etc. So LOLC Capital One falls on is a 100% subsidiary of LOLC Group. It's basically, as you mentioned, we are basically advising clients on capital market related issues with regard to raising equity capital, with regard to raising debt capital, and basically executing transaction, etc. So, and the LOLC Securities is the stockbrokering arm of the LOLC Group. LOLC Securities basically assist clients to carry out transaction in the Colombo Stock Exchange, and LOLC Securities has two main operational arms. One is trading arms, where the sales team advise the clients to carry out transactions, and there's a research division which carries out in-depth analysis of individual counters listed in stock exchange to give the investors better understanding of the capital market. So yeah, that's a very nutshell of the LOLC Group, but it's been a very large operation.
So you had the research division of LOLC as well.
Yes, correct.
So research is a very diverse field. A lot of interpretation is up for grabs. So talk to us a little bit about what LOLC Securities does as well.
Yeah, so LOLC Securities, as I was saying, it's mainly looking at carrying out transaction over the Colombo Stock Exchange. So we advise our clients to how to invest in stock market, how to make informed decisions, and there's two ways of making money in the stock market. You can invest in long run depending on the individual's capacity and strategy, trading strategy, and you can also look at short-term trading. You can use leverage to optimize your return. So that's kind of facilities provided by LOC Securities. In that function, we have the research division, which gives you, because for make such informed decision, you need to have thorough knowledge about the individual companies listed in the stock market. So to get that knowledge, you need to have macroeconomic understanding of the individual companies. You need to have the industrial understanding. So research division basically look at the overall view of individual companies, how the valuation of individual companies taking the financial parameters, and see what's the price it is traded at Colombo Stock Exchange. So we are giving the investors an opportunity to compare what's the price the individual shares traded in the stock exchange and what's the real valuation of the companies. So that will give the clients the informed idea to invest in a company and how to make better returns with a much more informed decision.
Exactly. So to make sure that the client is aware of what's
Yes.
available in the market and
Yes.
to make informed decisions regarding his or her portfolio,
Yes.
research is an essential part of any
Correct.
investment.
Correct.
You can't just blindly follow it. You
Yes.
can't just blindly trust a broker's or third party's
Correct.
word.
Correct.
So what constitutes as a good piece of research?
As I was saying, there now research, you need to be very independent. So when you are looking at an individual company, there can be various factors. There can be various sentimental factors coming into play, because sometimes the people look at a company which is well known and there's some price movement going up. People are tend to say it's a good company to buy, but sometimes you need to know whether there's an underlying fundamental. In our research language we call it fundamentals of the company. So if there's a underlying fundamental of the company to support that pricing, we need to check. Otherwise you are just getting into a rally which is just a sentiment driven or speculative driven rally. So again, there's two segments. As I was saying, it can be trading segment, it can be investment segment. If you are looking at trading segment, speculation driven rise can really generate returns, but you need to have your strong trading strategy in place. But research division mainly comes into play on the investment side of things, where you really need to analyze the individual company. So that's where our analysts really go deep into the companies. They meet with the management and they try to get understanding of strategic view of the management and how that aligns with the overall macroeconomic environment that particular company operates in, and see whether it can generate that much of value going forward to justify the value price is traded in the Colombo Stock Exchange.
Right, so the reason we've invited you here is to make sure that we can leave a message out to the public. We have a broad spectrum of people watching us, ranging from students to just junior analysts.
Yes.
So as the CEO, when you're ready to start your day professionally, what's the first website you sort of go through to enhance, to make sure that you're up to date with the latest news, to make sure it helps and
yeah, there are various sources of information you can use to get an understanding on the capital markets. But in Sri Lanka, the go-to site is basically the Colombo Stock Exchange. There's their own homepage, www.csc.lk, where you get numerous number of materials, including annual reports, interim financials, and there's independent research uploads also there. So you can there's a wide plethora of information available in that website. So it's a very convenient place to start your analysis. But sometimes you might not know, there's more than enough information, but sometimes you might not know what to look in for in the information. So probably it's always better to talk with a investment advisor and try to get an understanding with a research personnel who can help you out how to dissect the data and see how that will pertain to your valuation, or how that will pertain to the pricing of that individual company. So information wise, there are various news websites that can give you an indication, like if you say FMCG sector, if there's some industry potential picking up, you can pick up on the news website. But again, you need to know how that particular information is related to the individual companies traded in the Colombo Stock Exchange. So that's where the investment advisors and the research analysts come into play, where they can help the general public or the general investor to understand how to invest in the market.
Right. So share with us some of your insight. How has the Sri Lankan economy been performing over the past 6 months, in particularly since the 1st of January this year, the past 6 months? How has it been performing?
Yeah, it has been interesting to say the least, the last 6 months, especially if you're not only looking at the Sri Lankan context, but if you look at the global context, we can't really look at Sri Lanka in isolation in this day and age. Starting from Chinese circuit breaker, where the global market started the worst capital market in the history. Basically, it has been a real up and down roller coaster ride across the board, and there have been Middle East tensions, there have been Europe issues, and recent thing is, as you were mentioning, Brexit coming into play, and there's so much of tension in the minds of the capital markets. What is going to be, whether the world is looking at another recession coming forward. And Sri Lanka also had a tight macroeconomical environment, followed by the consumer-driven fiscal expansion last year, and this year we had to tighten the seat belts, and the government had to put in measures to control the fiscal deficit issue and curtail down the imports, and they put measures to tighten down the monetary policy as well as fiscal policy. So that had the impact on certain macroeconomic parameters. If you look at the interest rates, the lending rates would have gone up by around 300 basis points for 6 months, and if you look at the benchmark, the interest rates, again 300 odd basis points are up from the January to today, and that would have impact on reducing asset prices in the country. And again, inflation is on the upside with the introduction of new tax measures such as VAT, so it has been a kind of a slowdown scenario, but the things are now slowly falling into place. So the 6 months has been again, as I was saying, it has been an interesting time. Sometimes interesting may not be the right word, but but now I think things are slowly falling in place in context of Sri Lanka. Things are falling in place. As you were mentioning, new governor has been appointed, and now the macroeconomical, monetary policy and fiscal policies directions are more or less in place to take the country to a more smoother transition and to take it from there.
Right. So Sri Lanka by no means is an isolated country. We are vulnerable to a lot of global changes.
Yes.
Contagious, very contagious. So we want to talk a little bit about the level of FDI Sri Lanka attracts.
Yes.
How content are you, and what are the trends with the foreign direct investments that's coming into Sri Lanka?
Yeah, when you are looking at the FDI, again for the first quarter, it has not been that great. Compared to 2015, I think we recorded around 364 million FDI. This year it is around 165 million for first quarter. For the foreign investors, one of the main reasons they are looking at when you are looking at a country is the stability or consistency. Sri Lanka has formed a feel-good factor in the last few months with the government's initiatives to reach out for develop the better foreign relations, and recently U.S. Embassy has been saying that U.S.-Sri Lanka relation has been historically high, and likewise the east side also, the policymakers have been visiting Japan, which has been visiting China, and they have been developing the right trade links. But these outcomes of these measures are not overnight. So at the moment, what we are seeing in the lack of FDIs is little bit true with the transition of the government, and as well as the inconsistency of policy making. But now the things are slowly falling in place. You would have seen fishing ban has been lifted. It contributes around 120 million forex income for the country. Likewise, the government is pursuing GSP plus initiative and agreement, and slowly infrastructure is also coming into play. Now port cities about to go ahead, Kandy highways would go ahead, and LRT project is also start to kick off. So these projects are slowly taking place. So if you look at the numbers, also the construction sector is now for the first quarter industry has gone up by around 12% year on year after the lackluster year in 2015. So you can see things are slowly falling in place and things are moving forward now. So yeah, we are looking forward to how it develops from there.
Right. So with that promise or the hope of Sri Lankan economy progressing. We'd like to take a quick break. When we come back, we'd like to continue this discussion, particularly from the point of the stock exchange, some of the indicators, how they have been playing up, and the future direction of the stock exchanges, and what sort of advice he'd like to give to the investors. Don't go anywhere, stay with us. Welcome back. We're just going to continue the conversation with Mr. Shehan Bartholomeuz. He's the Chief Operating Officer of LOLC Capital One. Before we went into the break, we were talking about the level of FDI Sri Lanka draws.
Yes.
And we also want to talk a little bit about other factors that affect the Sri Lankan economy and in turn the GDP
Yes.
and the lifestyles of people.
Yes.
I want to talk to you about tourism, because making headlines today is that the Sri Lankan tourist arrivals have gone up 2.2%
Yes.
by June 2016, and the government had a target of achieving 2 million tourists by the end of 2016, and we want to see how realistic that target really is, and in particularly the impact. Why do we need so many tourists? What sort of positive multiplier effects will tourism bring with it?
Sri Lanka is a beautiful country, so one of the core strengths from the macroeconomic point of view is the natural beauty we have in Sri Lanka, the diversity we have, from the heritage sites to the nice beaches to flora and fauna, so much to offer. Even though the infrastructure may not in place as yet, we can see several projects are taking place. So after the end of war in 2009, we are seeing continuous growth in tourists at a very rapid pace, but still we are falling far behind the regional peers such as countries like Malaysia, Thailand, which are hitting numbers of 25 million, 30 million tourists, whereas we hit last year around 1.8 million tourists. For the country's economic point of view, tourism has long way to go. Now it has come to a certain extent, and now if you look at the safety side of things, Sri Lanka is one of the safest place for tourists. I saw an article during the United Kingdom's travel advisory. Sri Lanka is categorized under the safer list, and even India, Malaysia, Thailand, they are not falling in the same list. So we might have a competitive advantage over other countries when we are placing our tourism strategy. So if you look at the numbers, whether we can hit 2 million, I don't see it that much of an issue. Last year we hit 1.8 million, but numbers are slowing down. June, as you say, it was only 2.2% growth, but mainly because of the drop in the Middle Eastern tourists that particular month. But if you look at the first 4 months itself, it has gained about $1.2 billion. So these are really good numbers for a country economy of our size, but there's still a long way to go. So we need to have a lot of infrastructure in place and see what are the tourists we are targeting, and see how much per tourist we can grab to the country. Now at this moment we are only getting around $1,700 per tourist, but we should stretch it maximum, and we are only accommodating about 10 days per tourist visit. So these are numbers at a lower end, so we need to stretch it, and there's a room for expansion. So that's why I think any conversation with regard to macroeconomic outlook of Sri Lanka, tourism always comes into play. Now as of now it's the third leading foreign exchange earner, but it's catching up on the textile. But I think in the long term study it will be one of the main forex earners as well as economic development, and as its the multiplier effect is really significant. It can have a significant impact from the grassroots level, the job creation, etc. And so it's a very important topic, and our governments have been always been considered as one of the key objective in driving the economy to their goals.
Right, so just to add on to that, I think this morning when we went through the Business Insider, there was this whole world map about safe countries you should visit. And good thing is Sri Lanka was marked safe, marked green. So that is probably another reason, another sort of stimulus for all these foreigners to even consider Sri Lanka when it comes to hopefully their Christmas travels. So from that, we'd like to move towards the Colombo Stock Exchange. I kind of want to talk to you about the fact that the newly appointed central bank governor, Governor Indrajit Kumaraswamy, said that the Sri Lankan interest rates should be maintained, that there's no urgency to change or revise the inflation interest rates. He also said that the inflation rate should be maintained between 4.5 to 5.4% this year. We want to talk about interest rates because they're on the rise. I believe you have a chart you want to show and explain to us. We'd like to start with how inflation and interest rates are related, and in turn how interest rates should, like the status of the interest rates.
Yes. Yeah. You can see this chart is with regard to the Colombo Stock Exchange, I believe. Yeah. So the interest rate has been on the upward run since the tightening of fiscal and monetary policy second half of last year, and in the early part of this year the policy rates have been increased by 50 basis point, and I think it's a step in the right direction, and we need to curtail down the loose monetary policy we had in the last 2015. So but we need to be careful with the picking of the inflation. With the if we are now at this moment also, basically there's a liquidity is not available in the market basically. So this for drive the economy, you need to pump the liquidity and pump the credit. Now the credit growth is at a healthy pace, but we should not be very restrictive on the monetary policies. So if the inflation rate is start to pick up on north of coming close to double digit, it will be a concern, because then the monetary policymakers will have a difficult time in relaxing their monetary policy stance. So now the interest rates are going up. If they want to cut down the interest rate and grow the credit of the country, if the inflation rates are at a higher rate, they might not be in a position to further cut down the interest rate, and that will have a slowdown or impact on the slowdown of the economy as a whole. So that's a fine balance the monetary policy, basically central bank has to take in driving the economic growth by pumping the required liquidity to the system, and at the same time keeping the inflation objective intact, so the general public and the overall economy will meet the overall GDP growth targets. So that's a fine balance the central bank governor will have to on his plate.
So we're talking about interest rates, that they're rising. So I believe the margin is the band is between 8 to 12%. Is it the interest rates?
Yeah, you are referring to
this graph we just looked
yeah,
at.
it's the prime lending rate, the interest rate that central bank offers for the prime customers of there. So it has been going up, and it has been going up around 320 basis point, 3.2% for the first 6 months. So it's you can see even our market deposit rates and the lending rates.
So what does this mean to somebody who's just at home, who has no interest or understanding of the market? Interest rates are going up. It's nearly 11% now.
Yes.
So does it mean it's more expensive to take out leasing than
yes,
borrow?
Exactly. Now let's say, for example, if you want to buy a house,
Okay.
now 1 month back the housing loan would have been something like 9.5%, 10%. Now probably it's around 14%, 15%. So your individual installment will go up by close to around 30-40% on the installment side. So virtually, if you look at the fixed salary earner, he would have to allocate when you are taking a loan, he would have to allocate there's an amount he can allocate for a loan. So he might not be in a position to buy a house with the current interest rate change. So that, in the layman's way, I think that's a directive for example, to buy a house.
What is the motive behind it? Is the government trying to sort of hold on to consumers, and they're increasing taxes on VAT, so thereby sort of curbing consumption? On the other hand, in terms of the mortgages, the leasings on vehicles, it's expensive for them to bear repayments monthly.
Yes.
What does this mean?
Yeah, basically the government is basically having a bit of a tight time with the balance of payment running to negative figures, and our reserves are counted around 6.2 billion. It covers only about 4 months as of March 2015. So the government is running on a thin line, and so they cannot offer to more imports to come in. So they cannot offer a loose policy where they will not have enough reserves to fund the imports of the country. On the other side of the equation is the fiscal scenario. Last year we saw the rapid expansion of fiscal deficit, and so we should not be in a position where we cannot fund our expenses. That's why government is putting the
burden onto the consumer and the public.
It will have to come. Someone has to do
Someone has to do it. Okay, so from that, I'd like to move on to the next graph, which shows that the CSE turnover has actually slowed down, or it has dried up a little bit. We want to talk about the Colombo Stock Exchange turnover. We also have an official statement from the CSE saying that credit growth is slowing down. So what do you have to say about the turnover?
Yeah, it has something to do with the confidence of the investors. With the interest rates going up from one side, with the interest rates going up, the opportunity cost of investing and getting a return for an investor is higher, because you can always put to fixed deposits and get a return of around 11-12%, and so you need to factor in the additional risk of investing in equity and getting a comparable return. And from the other side, the global uncertainties has been resulting in foreigners exiting the market at a pace. Especially secondary market, we are seeing around 6 billion rupees of outflow on the secondary market. So there's a kind of uncertainty hovering on the trading side of the stock market. That's why you are seeing such a low turnover levels, hitting around $500 million daily turnover these days. So is for the stock exchange point of view, they are looking for some direction for the investors to come back in, and the fact that we saw a couple of credit rating downgrade does not help in the eyes of foreigners. So now with the macroeconomic policies are slowly putting in place, possibly we might see more stabilization, and so as again I want to stress from the foreigner side of it, what they want to see is the consistency. So they are on the policy making, so for them to make an informed decision. So we should not make inconsistent statements and see give different directions. So that will make life harder for foreigner to put their money to a foreign country. So cumulatively, all this impact would have resulted in a lower turnover. That's why we are seeing kind of lower turnover. If you look at last 5 years, it has been one of the lowest turnovers these days.
So thirdly, I want to talk to you a little bit about this thing called the PBV.
Yes.
I think that means price to book.
Yes. And
you're saying that it has been at an all-time low or something like that.
Yeah.
Firstly, what does price to book mean?
Yeah, it's basically how much price you pay for a company for the net asset value of the company. Net asset value means the accounting asset value. When you have in a company, you have assets, you have liabilities.
Yeah.
So the difference between the assets and the liabilities is the net asset value. So when you are looking at the trading of the stock exchange, the companies are priced at a certain price. So we are looking at what kind of a premium the price is trading compared to the net asset value. So when the net price to book value is at a lower end, we are seeing companies are not trading at a high premium. So price is not at a premium. So it might be a good opportunity for investor to come in, and because in future the price may trade into the average premiums. So now if you look at last 5 years, now it has been about the lowest price to book value, around 1.45 times the book value. Generally it is trading much higher. So that gives the kind of indication for investor the companies are trading at a discount. So there might be upside in investing in market in general. So there might be companies which are actually trading below the net asset value even. So there might be opportunities like that.
So all of these indicators give us different stories, but just to get a bird's eye view of what's happening in the Colombo Stock Exchange, how our local stock exchange is performing, I want to have a regional comparison just to see how the other countries are performing as well.
Yes.
Do you want to just talk a little bit about how our Asian partners are doing as well?
Yeah, these stock market moves are not only limited to Sri Lanka. If you look at the China, Japanese market, they are running to around 15-17% negative returns for the year to date. Even Europe markets like Germany, DAX index is around again close to 10% drop. There's a significant uncertainty in the global arena. Again, this Brexit is not helping at all. It is really creating a lot of uncertainties around the world. So that's why Sri Lanka is not alone in the terms of negative returns. There are only handful of indices have actually performed well in this context in the last 6 months or so.
Right. So next, something we're also interested in is the inflow and outflow of foreign investments to the stock exchange. So let's talk about the foreign behavior of our foreign investors. So what have they been net sellers?
Yeah, they have been net sellers. Again, it has something to do with the uncertainty hovering on the market, and it's to a certain extent the global uncertainties. So we were seeing the latter part of last year the indication from the US Federal Bank to increase the interest rate. Now with the Brexit coming into play and the other uncertainties in the global, they are delaying the increase of interest rates. Such uncertainties are creating better opportunity for investors to take the money from Sri Lanka, frontier markets like Sri Lanka, and put it to more established emerging markets. Now, for example, other markets which are trading at has come down in prices would offer more stable and more less risk investment opportunities for investors to exit from frontier markets and put into more established markets. So that's why most of we are seeing significant outflow of foreigners for the first half of this year.
Right. Just finally, to wrap things up with, I'd like to have a concluding remark regarding the ASPI, the All Share Price Index. How has that been? I think have we passed the 8,000 mark yet?
Not yet. We hit 7,800 levels with after the end of war and the optimism on that in 2011. But because of the high pricing at that moment, the market took a correction. So it has been side-day moving last so many years, last 4-5 years, and this year it on the net basis it's been around negative 9.5% return as generated by the ASPI. But with that again, the parameters such as valuation parameters such as price to book value, price to earnings come into play, and now they slowly start to become attractive, and they may give indication that some companies might be a good buys. Basically, you can get into companies and make a better return than compared to other asset classes you have to invest in. So yeah.
All right. So with that question, we'd like to wrap up this segment.
Okay.
Thank you very much for being with us. It was lovely long chat with you. Thank you very much for being with us. This is Mr. Shehan Bartholomeuz. He's the Chief Operating Officer of LOLC Capital One.
Yeah, thank you very much for having me here.
Okay. With that, we'd like to take a look at some of the local and global stories in detail now. Start off with stories from home today. With the appointment of the new central bank governor, he says that there's no urgent need to revise interest rates, and the Sri Lanka's newly appointed Central Bank Governor Indrajit Kumaraswamy says that the monetary authority is closely watching interest rates, and the transmission impact of previous tightening will take 12 to 18 months. He says that they still haven't seen the full effects of what has already been done, and he would like to evaluate and analyze what has been done over the next 12 to 18 months. The slight spike in inflation is partly due to one-off things like the increase in the VAT, so that has to be stripped out. Core inflation actually has been somewhat more stable, says the central bank governor. He also said that Sri Lanka needs to keep inflation to around 5.4% by the end of the year, with core inflation around 4.5%. Deputy Governor Nandalal Veerasinghe said that Sri Lanka was currently within this, and the IMF band has not breached an inflation ceiling. Commenting on the rupee-dollar pair, he said that the policy is to manage the rate flexibility and not to have too much volatility in the system. Indrajit Kumaraswamy said that the currency is constantly being reviewed, not for just domestic impacts, but also for international ones such as the Brexit, and the central bank must also take into timing and sequencing when considering the exchange rate. In other stories, the Asian shares have been going down. Bonds surged in the face of the Brexit. So Asian share markets turned tail on Wednesday as fears over instability in the European Union returned, and seeing the pound to 3-decade lows and hammering risk assets of all stripes. Concerns about the impact of the already fragile global growth spread to commodity markets, where oil prices were bulking, having shed 5% already by Tuesday. Brent crude futures went down $47.90, with US crude down to $46.50 a barrel. Spooked investors rushed into the arms of safe havens of sovereign debt and took markets deeper into unknown territory. Yields on US Treasuries, meanwhile, the benchmark for bonds worldwide, hit low records of about 30 years as investors had to pay Japan 0.27% to lend its money for 10 years. The sudden mood swing saw Japan's stock markets hit 3%, while the MSCI Products Index of Asia Pacific shares outside Japan fell about 1.6%. Dealers said that there was no one event behind these crazy moves, but the euro scored a 2.5% year hike on $83.30. And in other stories coming to you from the Colombo Stock Exchange updates, the private sector credit growth is slowing down in Sri Lanka. This is after the monetary tightening earlier this year, the central bank's new governor told reporters on Tuesday. We can see the credit growth coming down, but we still haven't seen the full effects of what has already been done, now that the spite of inflation is partly due to partly one-off things such as the VAT. Credit growth rose to nearly a 4-year high in April 2016 of 28.1% a year earlier, accelerating from March's to 27.7% despite monetary tightening measures in December and February. Our final story for you is that Sri Lankan tourism up 2.2% in June 2016 as tourist arrivals grew 2.2% to 118,038 in June compared to a year earlier. So this brought the total of tourists to 964,267 in 6 months to June, with the total arrivals growing 16.2%. The total arrivals hit a high of 1.8 million in 2015, while revenue from the leisure sector also peaked to $2.86 billion last year, and the island is targeting 2.5 million visitors this year with a revenue of about $3.5 billion. Arrivals from China went up by 5% and East Asia went up by 15% this year. However, there was a dip seen in arrivals from Western Europe, although the market grew 6.6% up to about 30,000 arrivals this year, and UK arrivals went up 9.6% to about 9,406. Visitors from the Middle East were down 58% to just 2,200 and 2,210 in June from a year earlier, and Saudi Arabian visitors also went down about 86% to a mere 400 from many figures just a year ago. So with that, we'd like to wrap up this edition of Business Today. Thank you very much for being part of the show. See you next Wednesday, same time. See you. Have a good night. Bye-bye. Take care.